Welcome everyone to our A4S Measure What Matters webinar, focusing on how sustainability factors can be measured. So we do have quite a lot of people registered for this webinar. So can I please ask that you mute yourselves just to limit any background noise? I know we have fans and a chainsaw in some of our locations, so fantastic if you can do that, that would be great. However, please use your video where possible so we can see your faces, trying to break down the barriers as much as possible. That would be great, thank you. So just to let everyone know that we are recording this webinar for others, and it will be available on our YouTube channel. So this webinar has both Academy and non-A4S Academy participants, and we're very glad to see all of you, so welcome. Now, before I begin, we'd just like to run through the ground rules of a productive session. Talia, can I just ask you to share the slide? I think this might be a familiar slide to a few of you, but it's always good just to cover these things again. Oh, one more. Fantastic. So please stay as engaged as possible. I know we have lots of distractions in our houses and our phones, but it would be great if you could stay as engaged as possible. We also have quite a lot to cover in an hour, so any contributions, please keep them relevant to help us stay on time. You can also ask any questions freely in the chat function, and I will just show you how to use that in a second. Finally, we do welcome any other members of your household who would like to learn, including pets and children. We know everyone is working in unusual circumstances, and these things are definitely beyond our control. But I'm sure they will learn plenty as well if they do wish to join. So the learning objectives, the agenda for today, introduction and expectation setting, that is just happening now. We will then have an interview with Helen Slinger from A4S on biodiversity and what that means for finance teams. We will then have an interview with Laurie Pearson from Brookfield Asset Management around the really great work they've done measuring social and human capital. We will then hear from Martine from the Capitals Coalition, looking at both the natural and the social capital protocols. We will then have time for further questions and close. So learning objectives for today: after completing today's course, participants will be able to describe the risks to business due to biodiversity loss, list the principles and the steps involved in the natural capital protocol and the social and human capital protocol, and finally translate learnings of others from the practical examples to your own work. So today's speakers, this is who you'll be hearing from today. So firstly myself, and I'm joined by my colleagues Helen and Elizabeth. We also have Laurie Pearson from Brookfield, as I say, and Martine from TEEBAgriFood as part of the Natural Capital Coalition. So I'm just going to do a very quick tech tour just before we dive into the content. I know we're all pretty used to Zoom now, but it's always helpful to do that. So if you go to the bottom of your screen, you can see the chat function. I'm just writing hello in there. Please use this to ask any questions. We will be monitoring this throughout the session. So any questions that you have, please do pop them in there. We will also be using polls throughout the call. These are to help keep our webinar interactive, but are also necessary for those of you who would like to claim CPD/CPE points. In the interest of time, please can I ask that you be speedy with your answers? We'll just test it really quickly here. So, have you already been involved in the measurement or valuation of social or environmental factors? If I can ask you just to complete that. All right, fantastic. That is everyone nearly. So thank you very much, very speedy. So we have a bit of a mix here, which is great. Hopefully we can all take some new learnings away. Great. So I would now just hand over to my colleagues for the first session.
Great, thank you, Lizzie. So in this first session, we will give you an overview of biodiversity and what it means for business. Back in May, on the International Day for Biological Diversity, which was created by the UN to increase understanding and awareness of biodiversity issues, we at A4S published a short briefing for finance on biodiversity. So I would like to ask Helen now to introduce the briefing and also to explain why it's relevant for measuring what matters. Helen, can you take us through the briefing?
Yes, of course. Thanks, Elizabeth. So yeah, I'll start exactly with that. You know, what do we mean by measure what matters? What we mean is how can we measure social and environmental factors and incorporate them into our business decisions? You know, often an organization's strategy will incorporate various social and environmental factors, but measurement and integration into day-to-day decisions isn't straightforward. It can be challenging. What we hope to do today is to introduce how this can be done and inspire you to find out more. So on biodiversity, biodiversity can often be more relevant to business than many people realise, though it can be quite challenging to make these connections in business terms. To compare it to, say, climate, which has a relatively easy metric to measure, greenhouse gases, I'm sure many of you are already measuring that. Biodiversity can be somewhat more complicated, but it still presents significant risks and opportunities to businesses and drives business value. So we, as finance professionals, as accountants, we really do need to understand it better to be doing the appropriate service to our organisations. So in terms of the biodiversity briefing paper then, you know, we wanted to help accountants get to understand what biodiversity is and why it's relevant to their role. So we've created an introduction to biodiversity in the form of this briefing paper. We sought to answer some of the key questions that we've heard from finance teams who've been trying to understand biodiversity and why it's relevant to them. So what do we mean by biodiversity? Well, before I jump into that, I will look briefly at what definition, sorry, that's it, perfect, the right slide, thank you. Briefly at some of the other definitions that sort of sit around biodiversity. So nature is probably the simplest of these, and nature obviously makes up the world that we inhabit and everything within it in terms of those natural elements. So geology, climate and living things and ecosystems we've got here. Now natural capital, we can think of that in terms of the stock of natural resources that provide benefits to people. So what of that nature do we actually use to provide us with benefits? And there are techniques to value natural capital and to do what's called natural capital accounting. It looks at the measurement of natural capital. So when we come to biodiversity, biodiversity is the measure of variety of living life on Earth. So the measure of the variety in nature. And a high level of biodiversity can boost the productivity of ecosystems and therefore increases natural capital. And importantly, it also increases the resilience of an ecosystem to climate change. So you can see how these definitions differ from each other and how they're clear and distinct, and that biodiversity is really about the variety. So why does biodiversity matter? So humanity has already caused the loss of around about 80%, 83% of all wild mammals and half of all plants, and altered 3/4 of the land-based environment. So we've had a huge impact on the natural world. And as we lose nature's assets, the activities that are carried out by the natural world, such as crop pollination and water purification, flood protection, and of course removing carbon from the atmosphere, all of that is also being affected. So you might hear some of those activities referred to with the terminology of ecosystem services. When you hear that, that's what it's talking about, those activities carried out by the natural world. So why does biodiversity matter to business? So whilst there are opportunities associated with biodiversity, such as the big opportunity to preserve and enhance the biodiversity for the good of nature, for the good of society, and of course the good of business, you know, risk is a really important driver when we're considering biodiversity. The 4 key risks that we identified during our research are on the slide here, are physical risk, regulatory risk, market risk, and reputational risk. And depending on the sector in which you operate, the potential exposure to and impact from these different risks will, of course, differ. So every organisation either depends on or impacts the natural world in some way. And the links back to biodiversity are arguably always there. These biodiversity risks will often manifest through the value chain, though, rather than at any organisation itself. And there are some examples, I think, coming up maybe on the screen just now in terms of the, click down, perfect there, in terms of some of the impacts there. So sorry, apologies, I can't quite see it on my screen. Perfect. So I guess some of the examples here that might help to bring that to life a little bit. If you as a business are polluting the environment, let's say that you are dumping waste in the ocean, you sort of follow the chain round, and we're having either you or anyone in your value chain, they are impacting the biodiversity of that ocean. They're potentially impacting the fish life or the coral reef, or whatever the local biodiversity is, which in turn impacts the ecosystems and can impact the food sources that we then ultimately depend on from biodiversity for our businesses. So there can be very, very simple examples of how biodiversity can impact our business, and there's just a few of them demonstrated here. So I think there's probably just as brief as I wanted to be as a quick introduction, but very happy to take any more questions, Elizabeth.
Great. Thank you. I think before we move on to the next question, I would just like to run a quick poll question to find out from the audience today whether your organization is measuring biodiversity in any way. So if you could just take a bit of time to complete the poll. Okay, so quite a number of people are not measuring biodiversity at all at the moment. Some of them are doing so, and it's mainly the responsibility of the sustainability team. Okay, great. So only a few, only one, the finance team is doing the measurement. Okay, so I think the next question is very relevant. So in the briefing, we talk a little bit about the role of finance. So perhaps, Helen, if you could just tell us a little bit more about how organizations should respond to challenges posed by biodiversity, and what is the role of finance in this?
Yeah, of course. So, I mean, in that briefing paper, we lay out some of the steps that businesses can take to start to respond to some of the challenges around biodiversity. A couple of those examples would be identifying the risks that biodiversity loss poses to your business, potentially measuring the value at risk, for example. Then you can think about how these risks can be managed once you know the quantum and likelihood of them. Another example would be defining some appropriate metrics to measure and communicate your impact on biodiversity and the value that it has to your organization. And by communicate, I mean primarily how you communicate to your internal decision makers, and though you may also decide to communicate some of this externally too.
Great, thank you. And I know in the briefing paper, we do list out some key steps that finance can take to start thinking about biodiversity. But what are some other useful resources to help organizations manage some of the risks that you just mentioned that would be brought about by biodiversity loss?
Yeah, so the paper we've developed, it's called a briefing because that's all it is. It's very short, it's very quick, but it's really just to introduce the subject to finance professionals. So in terms of other resources, the top pick for this is the Capitals Coalition. And of course, we have Martine with us today to speak towards the end of this webinar. They've been working on a biodiversity supplement to the Natural Capital Protocol, which I believe is going to be available very soon. I'm sure Martine will fill us in on that. And that supplement helps to strengthen the way that biodiversity is covered in the protocol, recognising biodiversity as a key component of natural capital stock, and helps you to quantify the values attributed to biodiversity.
Great, thank you. So now we have a few minutes for questions from the audience. Are there any questions you have for Helen about the briefing paper or about biodiversity in general? You can either post in the chat function or unmute and ask your question.
Or indeed, we can come back to them at the end when we have time for the Q&A across everybody.
Sure.
I'm happy
Can I ask a question? It's Belinda speaking. Thank you for the presentation. I was just wondering about the metrics and measurements. Have you sort of developing a standard set of metrics and measurements and benchmarking companies against each other? I mean, how are we going to get this implemented, across organizations in some sort of standard format? Because what I've seen a lot of is that organizations will report one thing in 1 year, and then the next year they'll report something else. So you can't even compare in an organization what they did between 2 years, let alone compare across organizations.
Yeah, that's absolutely a real challenge. And I think that's a challenge for anybody who looks across different organizations reporting, be that their annual reports and its investors, or whether it's wider stakeholders looking more closely in some of the sustainability reports. And you know, one of the challenges in this space is there is so many metrics that you could choose from. But of course, the flip side of that is that, you know, for every organization, for every sector, for the different environments they operate in, actually, the metrics are, it's not a simple thing to pull together standardized metrics. So in terms of whether we intend to do that, you know, that's not something that we would intend to do, but there are organizations that are looking at that. And they're looking at it across, not just specific to biodiversity, but also across different social and environmental impacts, in order to try and increase that standardization, because, you know, we all recognize it as a problem and we all want to find the solution, but it's about finding the solution in the right way to bring them, sort of the major players together, so that everybody's starting to think and look at the same information, and to sort of decrease that variation. So absolutely recognize it as a problem. And you know, there is motion in place to try and solve that, but we're not at that point yet, I'm afraid.
Thanks, Helen. Yeah, I think the Good Governance Academy, Mervyn King, has also been looking at harmonizing the different reporting, and I don't know if he's going to look at metrics, but thank you.
I'm sorry, it wasn't a simple answer of yes.
Yeah, not a simple topic.
Okay, I think we probably need to move on to the next session, but if we have time at the end, we can come back and address any questions about biodiversity. But we will be sending you the briefing paper in the follow-up email after this webinar, so you can take a look and always get in touch if you have any questions. So to close this session, I would like to run a CPD poll question. Yes, so what are the risks of biodiversity loss to business, which Helen explained just now? If you could just take a minute to complete the poll. Great, thank you. Yes, so the risks are physical, regulatory, market, and reputational. Thank you for that. Okay, thank you everyone. So I will now pass to Lizzie for the next session.
Great, thank you so much, Elizabeth. So I am very pleased to welcome Laurie Pearson for our next session, who she is at Brookfield. So Brookfield Asset Management is a global asset manager based in Canada, and they have over $500 billion US assets under management, and are a member of the CFO Leadership Network. As part of the CFO Leadership Network's social and human capital accounting project, Brookfield have done some very interesting work to measure their human capital. They have recognized that companies need to invest in their people and wanted to get a clearer understanding of the value of their human capital and how that changes over time. So full details of this work can be found in the worked example, which we will share after the session in the email that Elizabeth just alluded to. So as I say, very pleased to welcome Laurie. She is a senior managing partner and chief operating officer for Brookfield. And in this role, she is responsible for Brookfield's asset management operations. She is also head of HR, which means she was very heavily involved in the project to measure Brookfield's human capital, and is therefore extremely well placed to give us some more detail on the project today. So Laurie, can I please just first ask you to summarize what the project was?
Yes, we wanted to develop a baseline financial measurement of the value of our human capital. And as an asset management business, it is a people business, and our people drive our success. And they're key to building the relationships with our clients that are fundamental to our success, and they're key to delivering great investment returns. But even more broadly than that, retention of strong people that are focused on the sustainability of our assets is especially important in light of the fact that we own and manage long-term focused assets and businesses that provide critical infrastructure and services that support millions of people in their day-to-day lives. So we've always had a disciplined approach to managing our financial capital, and we wanted to add a similar perspective to how we organize, develop, and retain our human capital. And so this project was really a first step in that direction, and we focused on a few things. First was calculating the value of our human capital, and then trying to understand how this capital was linked to our value chain, and then even more specifically, trying to quantify the value that the human capital created and compare that to the cost of the capital. So right from the start, we recognized that this was ambitious and it was just going to be a start, but the hope is that over time, it'll lead to continuous improvements in how we manage our human capital.
Great, thank you. So I think you told us a little bit about the why. So maybe you can go into a little bit more detail about how you and your colleagues actually went about measuring the human capital.
Okay. So it started actually with a discussion on our value chain and, what success in our business, what really drives it. And it came down to, first building strong relationships in order to facilitate the raising of the capital, and then product innovation to ensure that we had investment vehicles that attract capital, then being able to deploy the capital effectively to deliver strong client service for our clients and strong investment performance. Once we'd done that, we then had discussions related to how the various functions that our people perform were linked to the value chain. And we wanted to get a sense of how direct the link was between the cost and the contribution, if you will. And not surprisingly, we found that some functions were directly linked to a specific aspect of the value chain, and others supported the chain more broadly and perhaps less directly. Then third, we had discussions related to the best way to calculate, the financially calculate the value of our human capital and what they created in the business, and came down to, again, the two most obvious outputs of financial value created by our people were first performance fees generated by our investment activities. And to think about this in the simplest form, it's a share of the positive difference between the capital our investors give us and what they return to them. And then the second aspect of financial value we looked at was the incremental base management fees that are attributable to growing our assets under management. So once we'd done all that, it came down to then the calculating the value on both a cost basis and a fair market value basis. And I guess a comment I would make here is that at this point, we made a pretty deliberate choice to keep it simple to start with, and not get mired in the complexity. So we decided to do a base case business plan, if you will, for 10 years, which we call our steady state case. And that meant we specifically excluded the growth in our base management fees. So we only included the financial measure of the contribution related to our performance fees. And I think in the worked example, there is a diagram which depicts the calculation. I don't know if you, okay.
Yeah.
And this is sort of a picture of what I just covered. So, we started with the cost being really compensation, benefits, and cost of a desk. And to that, we added the performance fees, which for us come in two forms, IDRs, which are the performance fees from our publicly listed vehicles, and carried interest, which are the performance fees from our privately listed vehicles. And that led to what we defined as our fair market value, or our franchise value.
Mm-hmm. Fantastic, thank you. And as you say, so more details can be found on the specifics of how in the worked example, which we will share. So what results did you find, and how has this changed decisions within the business?
Yeah, I'm not sure that it's impacted decisions per se, but it did set a baseline for us. And I think the real benefit will come from seeing trends over time. But I think what it did do is it prompted, a number of dialogues. And so let me cover a couple or three of those.
Sure.
First, it reinforced for us the importance of our human capital in value creation, and the fair market value of our human capital, when we calculate it, represented 60% of our market cap. So that was pretty interesting, and it was twice the steady state cost value, the cost, if you will. And then so that led to a discussion, which again we'll refine over time, where we had to acknowledge that embedded in this analysis was assumption that all of the value created, in this example as a result of the performance fees, was a result of the human capital. But we do recognize that there are other factors driving the value. For example, reputation, access to financial capital, the breadth of our business. So these are impacts that we will, explore and unpack as we go forward. But it also drove home the importance of consistency in our assumptions, so that we can really learn from this. And it drove home that this is an art more than it is a science, perhaps. The second thing I would say that came out of this is, again, it reinforced our ability to have a highly engaged and productive workforce. 70% of our human capital steady state costs were directly linked to an aspect of the value chain. And then when we looked at this percentage from a franchise value, and assuming we allocated all the incremental value to the functions directly linked to the value chain, this percentage increased further. So again, makes us think that it reminds us that human capital is an investment, not just a cost, if you will. And the third thing, it prompted discussions related to our human capital costs in the context of contribution to the value chain, and it's perhaps made us more aware that the mix, if you will change as we continue to grow and expand. As we were starting to build our business, it was more heavily weighted to the sourcing of capital, the deploying of capital. But as we continue to drive growth and expand, client service is an area that will require more of an investment, as is product development. So this information is all very interesting, and I think we'll start to see trends emerge as we continue to do this.
Yes, and continue to refine and test it. I think it does encourage really interesting conversations within companies. So were there any particular challenging debates or issues during the development of the project?
I think the biggest debate was where to start. And that's what led us to, let's just keep it simple. We can layer on, as we go. And that's why we kept it to, financial measures, if you will. And we tried to keep, even within that, our analysis pretty simple. Because it was, human data, if you will, and compensation and stuff like that, there were privacy considerations, and we had to access stuff from multiple systems, and that was a challenge. But I would say the HR team was extremely helpful there. So, and it was a good opportunity for HR and finance to work together. you know, and again, even when it came to the assumptions we were going to use around forecasting, you know, again, keeping it simple was the name of the game.
Mm-hmm. Brilliant, thank you. So from our poll earlier, we saw that a few people maybe haven't started to think about measuring social and human capital. Are there any tips you would give people on the call as to how to begin on this journey, I suppose?
I'd say take a leap of faith and get started, because that's probably the hardest part as we are starting to unpack, you know, we've done it, we have the baseline and we're starting to look at a year later, and that's where the dialogue is really starting to get interesting. So I would encourage people to start. Keep it simple. Scope and purpose, and making sure that those are simple from the start will help. You know, do partner with other groups. In our situation, it was HR that was extremely helpful. Embrace the dialogue that comes from the exercise and continue to refine. And again, as I said, consistency, I think, will be important as we analyze the data. But it really do get started, and the dialogue is kind of fun.
Well, there you go. That's a good call to action for everybody. So we just have time for some quick Q&As. Bob Willard, could I maybe ask you to come off mute and ask your question?
Yeah, thanks. One of the challenges we have when we're trying to assess these capitals, natural, human, and social capital, is the debate about whether it's appropriate to quantify, let alone monetize some of these, especially when it gets into natural capital. And I was wondering if any of that discussion took place at Brookfield around human capital, using financial metrics with dollar signs in front of them as a way of assessing the value of that capital, which from a financial, someone in finance, of course, that makes sense. But as you say, this is about people, and some people are a little uncomfortable with the monetizing of the value that people bring to the organization, and also how that helps you figure out how to improve the value, positively impact the value of the capital. Any thoughts about that?
Yeah, you know, I guess we got over that that hump, and there's one thing to understand and measure, which was how we approached it. There's another to, like, I think we're far from making decisions based on that. Now we're just learning, and I think you have to go through that before you can get to a point where it's not risky to just look at the dollar sign. And I would say the opposite probably happened from the risks that could happen, in that it really does, and you know, we always knew people were an important investment in the organization, and this has further strengthened that, I would say. I'm not sure if that answers your question.
It helps, thank you.
It's a gray area.
Great, thank you. Brilliant. So we will have time for a few more questions just at the end, but I would now just like to thank Laurie very much for a very engaging and interesting session. So I'm just going to quickly run another CPD poll. Here we go. So what are Brookfield's top tips for measuring the value of human capital?
I better not get it wrong.
I can just ask everyone to complete the poll. That would be fantastic. Brilliant. A few coming in. Great. Thank you all so much. So I will now hand back to my colleagues for the next session. And thank you, Laurie, again.
Great, thanks, Lizzie. So in this next session, we'll be covering the Natural Capital Protocol and the Social and Human Capital Protocol. I'm very pleased to have Martine van Weelden from the Capitals Coalition with us today. Just to give a brief introduction, the Capitals Coalition was launched in January this year and hosts over 370 organizations across the world to think about using capitals and transforming our understanding of value. The organization unites the two pre-existing movements, the Natural Capital Coalition and the Social and Human Capital Coalition. So at the Capitals Coalition, Martine manages the TEEBAgriFood initiative. So TEEB stands for the Economics of Ecosystems and Biodiversity for Agriculture and Food. And her work focuses on the business engagement across the project. And prior to joining the Capitals Coalition in March this year, she worked at the Ecosystem Services Partnership and the Utrecht Sustainability Institute in the Netherlands. So welcome, Martine.
Thank you, Elizabeth.
So some of us on the call might not be that familiar with the protocol. So could you start by telling us, so what are the natural capital and social and human capital protocols?
Yeah, I think the protocols relate to the question that Laurie just posed, where to start. So basically the protocols provide a framework, an internationally standardized framework, on how to identify, measure, and value direct and indirect impacts on both natural, social, and human capital to make better informed decisions. And the framework consists of 4 stages and 9 steps. So these stages are broken down to provide specific questions to business to guide them through the process of scoping, framing, scoping, measuring, and valuing, and in the end applying and taking an informed decision. That's basically the aim, and also to understand the complex relationships that business have with nature and human and social capital as well.
Great. Maybe you could go into a bit more details about the benefits for organizations using these frameworks.
Yeah. So we say that decision makers are basically flying blind if they are not making decisions based on all the capitals. So we see that financial information actually provides quite a narrow amount of information. So we'd like to businesses to assess their impacts, but also their dependencies on nature and society. Maybe before I go into this, it's good to note that, as you mentioned, we shifted from being the Natural Capital Coalition to being the Capitals Coalition now. So instead of just looking to natural capital or just looking to doing a natural capital assessment, we are now looking at the capitals in a more integrated way. So we try to shift from single capital assessments to multi-capital assessments, and hopefully in future by 2030 we can do integrated capitals assessment. But in the end, to come back to your question about the benefit for business is really to undertake a capitals assessment to understand the complete value, all the risks and opportunities to have better informed decisions. Yeah.
Great, thank you. Is there an example or maybe a case study you can share with us of an organization applying the protocols? And I guess given the audience today, perhaps highlight the role of accounting and finance professionals in the process.
So I think we have somebody from OLAM here on the call, but OLAM is a good example. We think they started with an underground assessment of water use and cocoa plantations, for instance. So they've really been on the forefront of the application of capitals thinking. And recently they have brought sustainability into the finance team. So they now have introduced a finance for sustainability department. So of course that really informs better decision making for and integrates finance and sustainability. So we think that's a really good step forward. And that's something that can be done through going through the framework.
Yeah, so I think let's get into a bit more detail about the framework. You mentioned just now there are 4 steps and well, four stages and 9 steps. Maybe you could take us through the 4 stages and maybe expand on the sort of guidance that the protocol provides at each stage. And maybe focus a little bit more on the steps as well that are about measuring and valuation.
Yeah, so great, you have it here. So the first step is the frame stage. Or sorry, I always confuse the step and the stage. I should put this correctly. This first stage is the frame stage. So it really goes into the why. Why should we as a business do this assessment? Why is it important to us? Secondly, it's the scope stage. So it answers the question, what is our objective? Deciding on the scope of the assessment, determining the impacts and or dependencies a business has. Thirdly, we have set out the measure and value stage. So I think that's probably a stage that many of you are very interested in. It really goes into how to do that, how to actually measure and value natural capital or social and human capital. And lastly, it's the apply stage. So what next? What do we do now? Now we have all this information. How do we interpret the results, and which actions and which decisions are we making? Yeah.
Great, thank you. So as I said, I think some of us on the call may not be familiar with the protocols, and they may be just thinking about starting to apply the framework. What are the top tips you have for those who are just getting started to use the protocols?
I very much agree with Laurie actually about keeping it simple and not letting the perfect being the enemy of the good. I think that's really important. And maybe also good to mention is that not all the numbers need to be perfect in order to make a decision. Previously, there was the question on monetary valuation, and of course, this is also highly debated academically, whether if we can monetize all these natural capital values, and actually we can't. So we can and should also use qualitative and quantitative information in order to have better informed decision making. And I guess that's kind of new, but it could help and simplify also the process. And maybe also just a top tip is to get started. And as the Capitals Coalition, we're a collaborative organization, so we do have a lot of resources, case studies, trainings, contacts, so people can always reach out to us or me in order to get started.
Great, and I think we have organizations from different sectors on the call today, and you mentioned about the resources. I know that there are sector guides and also a finance supplement, and also the protocol toolkits available on the website as well. Maybe you can just quickly introduce those resources to us.
Yeah, so we have a finance sector supplement really based on focusing on the financial sector. Next to that, as you mentioned earlier, we are working on biodiversity guidance, so that should be available mid-September, really delving deeper into biodiversity and how to assess and integrate that into decision making, and showing the risks and opportunities as well. Within our project, we just worked on the TEEBAgriFood operational guidelines for business, focusing on the food sector. That's the first document really that has this multi-capital approach. We still make use of the framework, so that 4-stage approach is really the frame we keep to guide businesses, but our work really focuses on the food sector, and it also builds on the food and sector beverage guide that we have launched a few years ago as well.
Thank you, Martine. I think we can go into Q&A time with the audience now. Let's have a look at the questions. I think there are a couple of questions from David Calva. Would you like to unmute and ask your question?
Hi, I don't know if you can hear me. Can you hear me?
Yes.
Oh, good, excellent. Yeah, very briefly, my first question was about substitutability between the different capitals, and whether continuing substitutability actually is a problem and doesn't help us as we move forward and try to maintain or enhance natural capital to levels that mean they're sustainable on a global basis. So it's substitutability. And there was another question as well. Oh, it's really a comment about natural capital, going back to the earlier comments about human capital and the challenges around giving it a financial value. And certainly in relation to natural capital, my view is, and I've wondered if panel members or anyone else would agree with it, is that certainly a natural capital value, if you don't give it a value, then effectively the value is taken to be zero, which is certainly going to be the wrong answer.
Where to start? Let's see, maybe I should have mentioned that while we're moving from the single capital approach towards the multi and integrated capital approach, we say that all the capitals are interrelated and integrated, but we do say that natural capital actually underpins all. So without natural capital, our society actually, we won't have produced capital, we won't have a society. So in that respect, natural capital can't be substituted. I think that's really important to mention. So despite this integrated approach, we do feel and see that natural capital should be the base. So we can't just trade it off with any of the other capitals. And to your second question, I think relates to my comment about value. Not everything can be expressed in monetary terms. So maybe a natural capital value will be zero, but still it would have a cultural service, for instance, or other nature-based solutions that do attribute value, but not in a monetary term. I think that's it.
Great, thank you. Any more questions for Martine or any of our other speakers today? If not, then thank you, Martine. And just to close off this session, I would just like to run a quick CBT poll question again. So both of the protocols take you through 4 stages in a capitals assessment. What are they? Great, so I think everyone has been listening. Okay. So the 4 stages are frame, scope, measure, and value, and apply. And similar to the other resources that we've mentioned earlier, we will be sending you links to the protocols in the follow-up email after this webinar. So to sum up and just reflect on what we've heard today from all our speakers, I would like to run a call to action poll question. So how will you translate what you have learned in this workshop to your work in the next 6 months? So just take some time to read through the different actions. Okay, great. We have quite a few that would like to look into human capital and how to measure that. and also talking to the CFO or senior members of the finance team about applying capitals accounting. That's great. Okay, great, thank you. So thank you everyone for listening and for your questions. Let's see if there are, okay. So just checking to see if anyone has any more questions for our speakers. Okay, maybe I'll just pass the session back to Lizzie now.
Sure, thank you so much, Elizabeth. So as Elizabeth said, we will be sending some further resources following this webinar. They will be a mix of our own material, so A4S's material, and some external content, which will be a mix of explore, read, watch, listen, and will include some of the content that we've discussed today, as well as some other useful links. Please do feel free to pass this on to your colleagues. We want to get this information out as far as possible. So the next workshop in our series will focus on TCFD and implementing the recommendations. This will take place on the 21st of September at 4 p.m. British Summer Time. For those of you who are accounting or finance professionals, you might want to consider applying for the A4S Academy, details of which will be included in the follow-up email. So I'm just gonna, if there's any more final questions. Nope. Fantastic. So as I say, we are running several more webinars over the coming months. In order to help us make these as useful as possible, can I please ask that you complete this feedback poll, which I'll just put up on the screen now. I will leave this there and leave it running. So all that is left is for me to thank you so much for your time and your contributions, and to thank our speakers once again for such a interesting and helpful session. So thank you all very much, and have a good rest of the day.